Okay, folks, thank you for being here. This is Harry Boxer of the Technical Trader. That's my picture, and that's the main page of my website. And just for starters, let you know that I've been doing this more than most people on Wall Street. It's over 60 years. I'm 77, and I've been doing this for a long time, to say the least. I love doing it. I get up every day at 3:30 in the morning in the Los Angeles desert to help my people be successful every day. I love technical analysis. I wrote a book on it called Profitable Day in Swing Trading, and I believe that it's one of the best places on the site to trade. And the trading room, it was one of the first ones on the internet back since 2001, when hardly anybody was trading online. And uh, it's a fun place to be. It's a good place to make money. There's very, very seasoned traders, many of which have been with me between 10 and 20 years, believe it or not. Some very successful traders, people who have actually quit their jobs to trade full time because they were doing so well with us. Just to start off real quickly, you want to start a free trial, it's free for 10 days. No credit card required. Just sign up and sign in and hopefully make a lot of money. We have some testimonials on the site of people who have been really excited about what they're doing here. I want to show you some of them. These are what some of the people are saying. And some of the people have done. A lot of people tell me they make enough money in the first 2-week free trial or 10-day free trial that they can pay for a full year of subscriptions. And it's pretty reasonable, to say the least. So let's get started. What I want to show you today is how to prepare for the trading day. And the number one thing about that, in my opinion, is your psychology. Folks, the worst thing to do is trade when you're having a bad day. You just make poor decisions. I believe that you have to come in with a clear head, and you have to be able to focus and be disciplined. And the rule about having to be in it to win it is ridiculous. There's times when you don't trade whatsoever. The best traders I've ever met and the best traders I know are people who wait for opportunities. And if they don't come along, they don't trade. They don't force the trade. Forcing a trade is how you lose money. It's okay to sit with cash. You know what they say, cash is king. The problem with that is you just don't want to be in a position where you don't have cash. Your trading capital is the most important thing. So you have to protect it at all times. If you have lots on your mind, just don't trade. You have to prepare and be confident. And the way to be confident is to be properly prepared. Your desk and your desktop and your setup should make you feel comfortable. I want to show you what I use every day in my room. And can you see that in front of you, David? Oh, he's not there now. But I hope you're seeing what my desktop shows. On the left side, I have a market minder of all the stocks that either I think are market leaders and or swing trades that we're putting on. And you'll see on top, this is a 5-minute NASDAQ 100 and a 5-minute S&P 500. Underneath that, we have our hourly charts. I have 6 NASDAQ level 2 stocks, of which usually these are 6 stocks we're trading during the day. It gives you an idea of where the bids and asks are and where the volume is. But for me, if it isn't a certain way, I'm uncomfortable. And you cannot trade uncomfortable. You have to be in a position at all times where the market makes you feel comfortable. And by the way, halfway through our, when I'm done with my brief presentation, it'll take about 30 minutes. I'm going to spend 30 minutes analyzing your trade. So please prepare with any stocks that you're interested in, me taking a complete look at from a standpoint of the daily, the weekly, and the long-term look. I'll be glad to give you support, resistance, and targets and stops on every one of them. So at the second half of my presentation, I'll be doing what we call analyze your trade. So please come up with some symbols for me if you like, and I'll go ahead and do that for you. So again, the psychology is very important. The preparation is what gives you confidence. On a day-to-day basis, your desktop should look comfortable for you every day so that you come in feeling prepared and you feel like you have in front of you the tools for success. What you're seeing in front of you now, hopefully you're seeing this, should be, is my trading room. Comments from myself and many people in my room. But I want to show, the reason I'm showing it to you is because I'm going to talk about how you prepare for the trading day to be most successful. The number one thing I come in the morning for, and I get up real early here in LA to get online to do a lot of work before the market opens. There's too many people who come in thinking that they could just, bing, 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 the market opens, and I'm going to look for a couple of trades and just jump on something and be successful. That's not the way to trade successfully, not in terms of preparation. What I look for and what I tell my traders to look for in the pre-market is I want you to go to any of the sites, NASDAQ, stockstowatch.com, stockcharts.com, whatever furnishes you information on pre-market activity. We're looking for pre-market movers and we're looking for percent gainers. I want something up at least 10, 15, 20% or more. At least 5% is a minimum requirement for my room. I also want something ideally over $2, $3 a share, hopefully somewhere in the $5 to $25 range, if not higher. I don't mind through $200, $300 stocks as long as the patterns are there and we can day trade them. And certainly every day, what I do in my room is give people ideas of all different kinds, whether they're $3 to $5 stocks, $50 stocks, or $500 stocks. It really doesn't matter to me as long as we have the ability to have a strong trend developing during the day that we can milk and make money on. What we do after we find those percent gainers, and I want to make sure that the two criteria I want to see is a percent move pre-market. And I also want to see volume. It doesn't have to be the kind of volume that you'd see during the day, but I want to see something in pre-market that indicates, anywhere between 50,000 and 500,000 shares, if not 5 million shares, on something that's running and running hard pre-market and developing continuation patterns, coils, flags and wedges, and is trending upward in a channel, something that is in a configuration that can afford you an opportunity to make money with it during the day. And that's what I do for you. Every morning I come in and I give you a list. Now take a look at the list here. It's called the revised focus list. It's right there. The revised focus list basically is a list of stocks that I found in the morning that I feel like have the kind of trends. They're breaking out, they're running, whatever. And they're in a situation where they're ready for potential day trades. Just 1 second, please. I'm sorry. Okay, sorry for the interruption. So what I do beyond that is then I go into each chart and I analyze stocks for what I think would be some of the best day trades for that idea, and I put out a day trade alert. Here's one: SINT, FUTU, SOSX. These are stocks and/or ETFs that I believe are going to be day trade for that day. Potentials: CYBN. I liked gold and silver this morning, so I put the AGQ silver ETF and the Nugget gold ETF out. I put out BE, tremendous looking chart this morning. And later on, as we got close to the opening, I saw a couple small trades and one MLBY that looked like they were ready for potential moves: Zeta, UAVS, etc. And then as we got closer to the opening, I may have added one or two more. Okay, so but the most important part about being prepared in the morning is that you look at the charts with me, because I go over it every morning and I do a webinar for you. And you will see my charts as they're developing. Now here's one that traded after hours, but it's the kind of stock that I alerted everybody to late in the day when it popped. It was trading around 17, and of course, doubled within 45 minutes or so. SINT was something we picked pre-market. Now let me show you this. It popped and pulled back. Let's go back in time. I want to show you why I was interested in it. Right there, after it popped and formed a wedge, it broke out. And that's where I put a little day trade on it. It jumped at that point from about 248 to 290. But what did it do after that? More importantly, it spiked 384, and it did it in about 10 or 15 minutes. So we did some quick trading on that one, and it was pre-market. And I encourage everybody, anytime a stock goes from 2 to 385 in just a few minutes, you want to take advantage of that pop. Well, look what happened. It pulled back, coiled, and we were watching it. And I said, if it breaks out of the coil, it might be a trade, but don't anticipate. And sure enough, it broke down. And this is what it did the rest of the day. Popped up, pulled back, formed a long coil, but you were dying with this stock if you held it, okay? This is why you have to take advantage of when you get a pop in a stock that runs that quickly. I think it went from 268 when we gave it to you to 380, and that didn't take long at all. So we look for pattern. Here's one I put out this morning, wave. Now I want to show you this one as well. It popped. It formed a beautiful wedge, and I said, if it pops this wedge, we're going long. So when it popped around 7.5, most of us went long, or many of us did. And within a few hours, the stock had reached 921 from 7.5. Beautiful day trade. And it wasn't done. It spiked to almost 11 from where we got in the 7 range. A beautiful 4-point trade in about 4 hours. And I encourage everybody at that point, when I saw a spike, look, when you're in a rising channel with strong pattern, all of a sudden it spikes up and the best volume of the day, it's usually time to exit. That was a perfect exit right there. But just an example of a couple things. Some of the most important things is when you come in, and when I analyze patterns, the number one thing I look for is opening gaps or spikes and consolidation patterns. You look at this wedge in here, again, it was something I wanted to focus on because that was before it broke out right there. You see it pop, and look what happened the rest of the day. Nothing but up, and you had nothing to do but just keep raising your stops. What are the most successful ways of staying in a trade that people always ask me? I always sell the stock too early. Well, why did you sell it? Well, I didn't want to give it back. I saw a little bit of a pullback. So that's the problem. When a stock's running, you don't want to give it back. But all you have to do is do the following. Raise your stop to right there underneath the pattern. If it breaks out, look for a pullback and then raise your stop to there. Okay, it popped up and pulled back, raise your stop to there, there, and there. Eventually there, and even there. And that's where I would have been stopped out of. Because once I see a trade go that far, that fast, if I'm not selling it on the spike up, I'm selling it as it breaks down through support. And even beyond that, it formed a little late bear flag. So it wouldn't have been something I would have been happy about staying in. The rest of the day was a waste of time. Give you a couple more ideas. Now, this morning we came in, this is a beauty. Pre-market, UAVS exploded. And take a look at this. Perfect little wedge formed on it, and it broke out. Here, let me get the wedge for you. Just a moment. There you go. Okay, so when you see a little wedge like that, after a pop, and it breaks out with volume, this is when we went long. Many of us got out here or there or there. It didn't matter. This is extremely profitable trade. It literally went from 310 to more than 5. And the market had just opened. In other words, this is just pre-market. Then the falling wedge, and I looked at it and I said, this could be a buy if it breaks out above that level. Look how many times it got to it, couldn't get to it, and backed off. So I always encourage people, do not buy something until the price gives you a trigger signal, meaning it's got to break out over a certain level with volume. And to boot, relatively, there was no volume there. So we've stayed away from that one. FCL, another good example. It popped pre-market, formed the wedge, and then when the market opened, it went vertical. Now, I said always look for first pullback. Notice the 50% retracement there to there and back down to there, and right to that red line, which is the 50-day moving average. As soon as it hit that and bounced off of it, my traders went long around 7. Within a couple, 3 hours, it was 849. A good trade. And notice that if you had raised your stop here and then raised it to there and raised it to there, you've still been in it. Depends where your stop was exactly. But even here, you've still been in it into the close. But when I see multiple waves up, 1, 2, 3, 4, 5, I'm usually a seller around there. Worst case scenario, you're in a rising channel. it breaks the channel. You sell it there or you sell it there. It doesn't really matter. The point being is where did you get in and why? And so that was one of the examples from the pre-market list that we put out this morning. MSTX is another. Now, I really like the way this stock trades. It's the ETF for MSTR MicroStrategy. When the market opened, it popped and pulled back. But I want to show you what I saw in the morning on this one. So this was a pop, and notice how test, breakout. Even if you bought it up here at 98, check out where the stock went before the day was over. 111 there, and later on the day, at 116.5. You would have been stopped out there for sure because my discipline would call for a move underneath that level and a stop out under 105. So you'd have been stopped at 105, but you would have been in 98, even if you didn't sell at the high. You had a 7-point profit. So those are just a few examples of when I come up with a focus list in the morning and I put it out there. The traders in my room have the advantage of not having to do that work, but you have to be there. And if you really want to be a focused, dedicated trader, you got to be there early. My first webinar comes out about 8:10 Eastern. 10 after 8 every day, I do a live webinar until just before the market opens. Now, I'm not on for an hour and a half. I come back and forth and do several pre-market, we call it pre-market updates. But by the time the market opens, within 10 minutes, I'm doing the first post-opening update, and I do updates all day during the course of the session. And you can see me drawing my lines and showing you the trend lines and the targets and stops all day. So just to step back a little bit, we're looking for pre-market movers. We analyze those chart patterns for those that meet my criteria. And my criteria, look, folks, after trading for dozens, of decades, well, I wouldn't say dozens, but for several decades I've been trading, I come up with what feels to me the right pattern, the right volume, the right type of energy in the stock. And that's something that you may or may not know yourself because it takes years to develop that feel for the market, feel for a certain stock and how it's trading early on pre-market. What you do is you then create a focus list like I do of 10 or 15 stocks. Now, we're not trading 10 or 15, but we're going to come up with the top 1/10 of 1%. There's, 12, 15,000 stocks out there. If I can come up with 10 or 15, we're looking at 1/10 of 1% of the top of all the stocks in the universe. If I can come up with what I think is the best, top 1/10 of 1%, then we have a big advantage over a lot of other traders. And I'm continually revising the list. I'm looking at stocks that are breaking down pre-market or dropping out of the stops, and I'll delete them and I'll say this is no longer on a focus list for whatever reason. Eventually, what we want to do, if you're a trader that can handle it, I only want you to do 1 or 2 stocks. But if you're a trader that can handle it, monitor 3 to 5. 3 to 5 good-looking charts. And I'm not saying you're going to buy all 3 to 5, but you want to monitor those stocks because if an opportunity arises, if you bought or sold a stock early and you have cash to buy something else that comes up later on, because even though early on you weren't able to buy it, it may pull back and consolidate and form a consolidation pattern such as a coil or a flag or some pattern that's a continuation pattern that's going to set you up for a trade midday or afternoon. And therefore, we're going to keep on monitoring the stocks that look the best, whether we're in or not. And that's my job. And that's what I continually do. Each update, I go over the focus list. I go over, which can be as much as 20 or 25 stocks. But when I do my webinar, I'll run through all of them. I'll show you the patterns, which ones look best, which ones don't, and may revise some of them or may take some out. And I may add during the day. You never know when a stock pops or breaks out. And in my room, I have seasoned traders that are really fabulous that alert me to when something's breaking out when I may not see it. So the best thing is having several hundred, several thousand eyes at sometimes at one time watching the market and giving me a heads up on something that may be breaking out to your advantage. Always check when you're looking at a chart where support, resistance, and what a target might be. And the target can be based on several factors. It can be based on previous highs, where resistance is. If you're in the stock here, for example, you may say to yourself, okay, there's resistance there and there's resistance up here. Target number one for me would be right there. If I get in on the breakout above that level here, I'm selling some there. I'm putting a stop there, not stopped out. And then you'll see me drawing lines and drawing channels all day, support, resistance, and targets to give you an idea of what the channel top and maybe a target might be on something like this. Always checking the chart for support, resistance, for targets and levels that may be breaking out of or down through, and an area where you may want to put a stop in. For example, here, for sure, and a pullback. Once it runs up, I raise my stop to here. I might even raise it to there. It's up. You have choices all day on what to do and where to set a stop. But once I've sold half or a third, I'm always interested in where the stop's going to be at all times. You should buy it, by the way. Rule number one, when you enter a trade, enter the stop. Don't make a mental stop, because that's when you have a chance to screw with yourself. Your mind will do that. Okay, you're a human being. You have emotions. You're going to be emotional. Don't let emotions get in the way. Be disciplined and focused, and let yourself be smart. This is only a stock. Okay, it's not your girlfriend. It's not something you have to be too emotional about. You just basically, this is the number. That's the number. There's the target. There's the target. Whatever you want to do with it, but you must set it in your mind and write it down in front of you, and then put it online. Put it in with your broker. Your stop and your target, your sell point. And here's another philosophy about trading. I believe in scaling in and scaling out. I think what I find in trading is that most people will buy and sell something all at the same time. If you have a 2,000 shares of something, why do you have to sell all of it? Sell 1,000 at the target. Raise your stop on the rest. When it gets to the secondary target, you can sell half of it again. You still have 25% of your position. If it continues to run, you can milk it for a little bit more. Or if it rolls over and stops you out, you made real good money on 3/4 of your position, and you may have broken even or lost a little on that last quarter because you were stopped out. But it doesn't matter. You're focused, you're disciplined, and you know what you're doing, and you should feel comfortable with that at all times. I think the problem is people are nervous when they trade because they don't know where to buy it, where to sell it, when to buy it, or when to sell it, and that's the chief problem in trading. And it takes years to develop that experience, but you don't need to have that experience if you're a fairly new trader, because that's what I'm for, and that's why you come to my site. You have to, when I say choose one or two stocks, you choose the ones you're most comfortable with. There's some people in my room that only trade stocks that are $3-4 a share because they can buy thousands of shares, and they're more comfortable with it because they can unload in tranches. They can sell a little at a time, or they can sell a piece of it. If you have 200 or 300 shares of a very expensive stock, it's difficult to scale in and scale out yeah, you can sell 100 at a time or 50 at a time, but it's like, that's not the way I like to trade. I like to have leverage, and I like to have flexibility. So again, the psychology of trading is really important. Again, having a clear head, being focused, and trading with confidence in that you're making the choices because you want to, not because you feel pressured into it. It's halfway through the day, you haven't made a trade, and you force yourself to make a trade because you want to be in it to win. I totally believe that sitting on your hands is great. And by the way, we have a guy in my room that has a great philosophy. He says that his best trade ever was a well-placed stop. What that just simply means, if you put a stop in at the right place, and people don't know where to stop it, always stop under a trend, under a support level, under a moving average. These trailing stops, or 5 or 10% or 8% stops, or whatever you put out there that doesn't make any sense to me technically, I think is foolish. All it is you're afraid to lose more than a certain amount of money. So you'll put a trailing stop in, or you put a stop at a certain level that's meaningless. Always put a stop in underneath a place where it's breaking support, it's breaking a trend line, it's breaking a moving average, and in some cases, it's breaking all three. So basically, I'm going to wrap it up real quickly. My first half of this presentation is, and please get your symbols ready, folks, because I'm going to be giving you my take on any stocks that you have today that you feel you want to get my technical take on it, and I'd be glad to give that to you in depth too. So again, we're coming in the morning. We're looking for the biggest percent gainers. You're going to look at those chart patterns in the pre-market and see which ones may be moving, which ones have the best formations, the best volume, whether they're breaking out above key levels or through support. The same thing on the short side, by the way. They don't call me box of shorts for nothing. I used to be really good, and I still am, at picking stocks. As a matter of fact, I believe that stocks go down twice as fast as they go up. So when you get a box of short or a swing short trade from me, it's usually a much quicker move. Sometimes stocks will go down in a very, very quick order, and then you get yourself a pretty fast trade on the short side. So remember, every morning I create a focus list for you, but you need to start learning how to do that yourself too. And then revise that list, not stop during the day for stocks that aren't working, and cull that list down to 3 or 5 stocks and follow them religiously during the course of the day. Usually you're only going to trade 1 or 2 of them, maybe 3 of them. It depends on if the first trade or 2 is successful or even not successful, and you get out of it and you want to be back into something else. Again, don't force yourself to trade, but if something presents itself, go for it. And it's always based on your preferences. Again, what are you comfortable with? Some people love to trade high price liquid stocks. That's all they want to trade. People don't like low price stocks. Some people love low price stock because of the quick percent gains you can get on them. A stock to go from 1.5 to 2 is 33%. You'd have to go 15 to 20 for another stock to do that. So that's why a lot of people like the lower price stocks. Because when they move in big percentages. But they also have more volatility, and that's something some people can't deal with. So at this point, what I want to move into is analyze your trade situation, where I'm going to go over all your charts, and that ends the first half of my presentation. I really want everyone to think about: am I disciplined and am I focused? Am I ready to trade psychologically? Is my mind clear? Do I have a lot of my mind that's negative? Am I having problems at work? Am I married? Whatever it is that's creating you stressed. You don't want to trade when you're stressed, ever. Take a day or 2 off, always, when that happens. Okay. Your desktop, your chart setups, your screen setups. How many screens do you have? I only trade with 3 screens. I think that I don't need more. I know people that trade with 8, 10 screens. I know guys that trade off the laptop, just 1 screen, and they do alt screen. They go back and forth. To me, what's most comfortable is having a laptop with 2 large monitors, and then put most of what I need on the large monitors, and my laptop has my charts and stuff like that. But everyone's different, and everyone's needs a certain level of comfort. And if you, by the way, want to know how I set up my desktop or want some more information on that, you can feel free to message me or send me a message to support@thetechtrader.com at any time if you have a question or interest in my site or have any questions about what it entails. So part 2, analyze your trade. I'd like to start now, folks. So anyone has a symbol, please post it under the chat. It looks like there are a few. Okay, someone says here, hang on a sec. Okay, BURL, that's Burlington. Again, I'm going to give you an analyzation from every time standpoint. First of all, let's go long term. Obviously, Burlington was a monster from 2013 to 2021 when it went from split adjusted 23.5 to 365. So it went up 15-fold. The long-term channel broke right there. The stock had a really nasty downtrend, 20 to 22. It popped, it pulled back and did a multi-year retest, which I like, and then ran up. And right now, the configuration on it is this. It's in a 1, 2, 3 wave. This is, I consider 1, 2, 3, wave 4, meaning in a long-term Elliott wave count, This is wave one, this is two. Notice how it held price and moving average support. It ran up dramatically. It pulled back. This is what I would consider a wedge formation. It's right up against it. If this gets to 282.5, and it's right underneath it, the high last week was 279.5. Above 282.5, I have a $300 target. Beyond that, that's only mid-channel. Beyond that, it could run to as high as long-term 400. Now let's go in a short-term pattern on a daily chart and show it to you. Again, here's that 1, 2, 3, 4-wave move. And it may have already broken out of the pattern, but not to the double top. I consider this a very bullish chart. If it breaks through here, it could have a nice run. On today's intraday chart, on the last couple of days, you can see it ran up and it's coiling on a very, very short-term basis. Support is about 266.7. Resistance, 279. And as I said earlier, your target at this point is 300 if it breaks out above 282, 283. That's for Barry. Okay, Microsoft. I'm getting worried about this. I loved Microsoft all year, but take a look at what I think could be, might be, a massive head and shoulders. See it? If you don't, this is the left shoulder complex. Here's your head, and here's your right shoulder complex. Doesn't have to be a shoulder, it could be a rounding top, consolidation area. So after a run that saw Microsoft in the last 2 years go from 220 to 480, not quite, 467 or something. It's now in a position where for the last 4, 5, 6 months, it came down and bounced and came down and bounced, and it's forming a large coil. So I want to caution one thing. When charts do this is one of two things, always. And I want to show it another example of it here. Left shoulder, head, right shoulder. It looked like it was going to break down and it routed right back up again. Turned out it was a bull wedge, or falling wedge in this case. This is a coil. Until Microsoft either breaks out above 442 or below 407, I would be I would have to call this neutral. But it's dangerous because it's on the long-term trend line as well. It goes back a couple of years. And if it cracks that, it might very well crack support. And then we're talking about a move down that could see the stock down around 380 for starters. And if it breaks 380, it's Katie bar the door on the downside. And that's my look at Microsoft for you. And that's for Bill Adams. And DPST, is the ETF for regional banks. I talked to John Thomas today, a very astute investor, you may know. And John is of the opinion that regional banks are the place to be. He just likes the financials and he likes the regionals, and he thinks they haven't started yet. Well, guess what? Based on his pattern, or what that is, based on his pattern here, this is a beautiful base developing. See it? It just broke out. So in essence, right now, my target has to be, this is an exchange traded fund for regional banks, DPST. The breakout and this wedge pattern is very bullish. The fact that it broke a long-term base and did it with a gap, and it's held the gap and it's consolidating above it, tells me it goes higher. My target is 185 and 204.5. And then maybe 300, 301. Those are my targets. Nice looking chart. Longer term, you see there's a lot of room to run for this one at one time. This is probably a reverse split. Yeah. You can see why I would have a juxtaposition of resistance up in this 300 range. So give or take 5 points, 300. That's a really nice move. And but my first target is going to be closer to 200. So I mean, on an intermediate basis, of course, nothing near term. Near term, I would look for about 170. This is a very, very nice chart. Okay, I got Bill Adams also wants to know about TLT. That's the 20-year Treasury bond fund. Not pretty. Wow. On a very long-term look, it's obviously bearish. On a shorter-term look, it's kind of basing. You can see, though, where support is 87.5. Big support. Beneath that would be low 80s. The October low, about 82.5. So 87.5 and 82.5 is support. Near term, got resistance right there, about 95. That would be my near-term target. If it gets to 92 3/4 and then 95.6 area, then we can go back to 101. That's my take on that one. ARK, that Kathy Woods stock. Yeah, maybe not. That's a different one. This is Bitcoin. Extended, overbought, and dangerous. But it definitely broke out. Support is 55 3/4, 58 and 55 3/4. Now, in looking at this chart across longer multi-month timeline, the next target is near 68. But you can see as anything that's moved from 40 3/4 to 65 that quickly, obviously is vulnerable to pullbacks, consolidations, or at least, if not pullback, at least sideways consolidations. But it's just too far, too fast for me. I usually avoid these kind of stocks when especially the only problem is, look, you don't want to sell something, what you want to do is stop it. And the reason I say that is because look at the momentum here. You could have sold it there, and it kept going. And same thing happens here. So why not take advantage of it by raising your stops? At this point, the stop is under 59 3/4. Stop under that, okay? Good momentum. There's other stocks I like better in that group, but there you go. And this is shot that if it continues, it can not only test 71.62, the all-time high, but even go through that. For another one is Oxy, also for Mr. Adams. Well, I don't like anything in the oil industry, quite frankly. I think oil continues to go lower, but I may be wrong. I told this to my people 6 months ago. Everybody was saying oil, and I'm saying why? Same thing with gold for many months until it was finally ready. So what I see on Oxy is a 1, 2, 3, 4, and a fifth wave. Now the fifth wave may be truncated or shortened, and this could be it there. Or if it continues in the fifth wave, and it looks like it could, you might see 44.5, 45 on the stock before it's all over. Yep, that's my next target. See, this is a stock I wouldn't touch with a 10-foot pole until I see at least one trend line or declining moving average taken out. It would have to get over 53 with energy. Energy meaning volume, enthusiasm, etc. And then really, for the most part, above 56.5 is where I get more aggressive with it. Because then it could be 58, 60, 62, 64 or more. Advanced Micro, AMD, for Garrett Daniel. How you doing? I just say in New York, Garrett. How you doing? Okay. We have obviously, I've been watching AMD for 20 years. What a monster move there, right? Then it came down. Great move from 51 to 200 and change, fourfold. And now it's a 1, 2, 3, 4, and the fifth wave, if that's in fact what this is. And right now, I must say that the semiconductor group looks like crap. Doesn't mean it's not a buy. It just means I don't like the look of it. If the fifth wave completes, it might very well either retest a low or make a lower low towards 105. My targets are 112, 105, and 93. To test that level from way back in October of last year. It may come full circle, it may not. And from a shorter term standpoint, 1, 2, 3, 4, 5. So 5 waves down usually means bounce. And that's one of the reasons why I was enthusiastic coming into today, because I thought the market was not extremely oversold, but oversold enough for a bounce. And not only did the market bounce, but so many individual stocks had big days today. There is the key support right there, and it bounced off of it. You do not want this. You don't want AMD below 132. You get to 132, you'll probably see 124.5. What I want to see on any stock in a 5-wave decline is first a spike up through resistance, and then enthusiastically get through the moving averages and the prior high. So I'm not going to be happy until I see 151. At that point, it's good for 161, 171, maybe 185. Just don't know yet, but right now it's dangerous configuration, but it is a bit oversold short term. Palantir was one of my biggest plays of the last year because, believe it or not, I'm going to show you back here. Here's where I spotted Palantir that day. You see the long downtrend, the left shoulder ahead and right shoulder? I break out above the high. It did it with big volume relatively. 170 million share traded that day as it blew up from 9 in 2 days, 9.5 to 1190. And I said, if it does any pullback consolidation here, it's probably a buy. Here's what it did. I can get this to grab here. Okay, so it had that breakout there. Look what it did. All the way up to 17.5 from 11 change. And then it went into a consolidation and went to 20. So that's where I spotted it, and we got a beautiful swing on it then. Now, over the course of the next few months, consolidated, up, pulled back from the coil, and broke out. Breakaway gap. There was no reason to sell the stock anywhere. It did not violate support anywhere along here, or here, or here, or did it? Let's see. Not yet. Boom, new high. Pull back retest. More new highs. More new highs. Where's the top? I don't know. But how about 67 from 11? Yeah, that took a year and a half, but 6-fold in a year and a half is worth anybody's while. Where's it going from here? This stock is extended. This is a reversal day. I don't like this. The volume was not light today. 141 million shares on a day the stock makes a new high and reverses with a loss for the day. If it doesn't, and look, I always have the philosophy that a day like this is dangerous, but it's not trend reversal until it gets a follow through. We've seen too many 1 to 2 days down and then right back up again. So you have a choice what to do here, and that is, do I want to stop this here? Or there? And the reason I say there is after it ran up, pull back for just a little bit, and then ran up again. There's also a trend line there. So anything below 54.75, 55 would get me out of it. But I'm worried about this stock right now. It's way, way, way extended. In August, this was 21, folks. It's tripled into 67, 21 to 67 in about 100 days. So David asked me this. Boom, Mr. Cosminer, that's my Palantir take.
All right, thank you. Yeah, I really like the stock.
Yeah, I do too.
I buy a little every month.
Well,
and
except
just
for
hold
one
it.
thing. 6 to 60, tenfold. Oink, oink.
Yeah. 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 Yeah.
Okay. In video. NVIDIA really worries me. I love the company. I love what they're doing. I just think it's overbought. It's overowned, meaning it not only is overbought on a price standpoint, but it's overowned by every institution there is. Thinking AI, this is the next generation. This is going to, after splitting, it's going back to 500, and it very well might. But I'm going to tell you right now that if NVIDIA, and by the way, you can see that even though the market was making new highs, look what NVIDIA was doing. It went sideways for a week. It did nothing. As soon as the market fell, this fell with it. Here's your major trend line. You cannot let NVIDIA go below that. This is a triple support break. If NVIDIA takes out 132, the market goes to hell in a handbasket, in my opinion. Okay? If it manages to hold in that range and run up again, your target's 165.70. But for me, I would have to stop on the 132. There's a 50-day moving average. There's lateral price support. There's a prior high all around that range. A break of that line, actually technically if it breaks 130, it could fall to 116 and maybe 103. I know everybody in the world will buy it there. But I just am concerned that unless the market turns and it turns through and takes it with it, like today, for example, I was amazed how many NASDAQ 100 generals, other than NVIDIA, were up 3 to 5 or 10 points, and Netflix was up, what, 22 or something? And one of the others was up 18. And NVIDIA was down all day, even in the best part of the market. So be really careful with NVIDIA. Dalji, that's a name, of course. Daljitoria. All right, anyway, there you go. There's your answer. And Garrett says he's doing well. Thank you. All right, is anybody else with a question for me on any stock? Come on, folks, there's your opportunity to get expert analysis from a long-term professional. Tesla and, okay, here we go. A few more. What is that? EDU. EDU is the largest Chinese educational stock, I believe. That's the same one, yep. And I was really high on EDU all along here. Look how long that trend went. A good 2 years, from 8 and change to 98 change. And then it took months to come down and spiked up. When the Chinese stocks had that big run last month, this thing literally went from 60 to 90 almost. Look how fast it came down and broke. I think the target is 52. There's support there. And there's support around 48.5. But this is not a good chart. Anytime you have that kind of a pattern and it breaks some key support over a couple of 3 months, it's just not good. So if I were you guys, I would avoid that like the plague. Who gave me that? Okay. CRWD. Great chart, long term. January 23 to June of 24, a year and a half. The stock goes from 94 to 400, fourfold. Plunges with the tech stocks. And that's something to always consider. How far did it plunge on? How volatile is that stock? 398 to 200, almost in half here, and it didn't take a month. Not pretty. Big spike reversal. This is a V bottom or right-handed extended pattern. And it created a new rising channel. Here is your rising channel. Guess what it just hit? That's right, the channel top. Multiple waves. 1, 2, 3, 4, 5, 6, 7 waves up. Now, some people will argue this is the 1, 2, and this is 3, 4. And this is the 5th wave. Or it's 1, 2 of 5, and we can do 3, 4, and 5 and go up to retest the high. If the market goes into a one more leg up bull phase, this might very well see 375 to 395. What I'd worry about if I were you, any move below this zone is a stop for me. I know it's a long way from here. Can't let it get into 315. And I prefer that if today's low was taken out, I would stop half right there under 330. So stop half under 330, half under 315. If you're stopped at a half, you still have half. If it holds 315 and goes up to 75 or 85, whatever, you could always buy the half you sold out. But that would take a move over 400 with volume. I'm not so sure that after I'm running from 200 to 350, it's going to do that. But it's long in the tooth. It's in a beautiful rising channel. No reason to sell it per se, other than the fact that it's extended. Tesla. Boy, did I make money for my people with this stock. The Tesla ETF, TSLL, broke out here. We went long at 14.5, and it went vertical to 23 in a week. 23.5. It's pulled back. But right now, I'm giving you Tesla because that's what you asked for. It's broken out across this line and through lateral price resistance as well. And it actually pulled back to retest it and moved up again. 100% stop Tesla under, and I'm telling you, everybody will, under 309. 309 gets me out. The target is 375 and 395, maybe 400 on this move. But it's extended short term. And at that point, it will have had a 1, 2, 3, 4, 5-way move. Yeah, I'd exit the stock. IBB, that's biotech ETF, I think, no? Yeah. There's something wrong with the biotechs, and I'll tell you something else. My experience, and I've been doing this for a lot of years, is that biotechs do great at the tail end of every market, but they get the first ones to get creamed because the valuations are ridiculous. And the right reason they are is because they have that potential spectacular drug that's going to make them the next Amgen or whatever, right? So in looking at the long-term moves, it's a 1, 2, 3, and this is 4. But it broke key support along the way. And it did it with a big breakaway gap to the downside here. This has dropped from, I kid you not, 150 to 132 in a week. If you think that's good, take a look at LABU. How about 150 to under 100 in a week and a half? So even though they may bounce, if you get a bounce, look, if you want to know what the short-term target is, it's 138.39. And if you get it there and it's on low volume, sell it as soon as you can. I'm really not happy with the way I'm seeing, or what I'm seeing in biotech right now. It's dangerous. Coin, well, this is another one that I did very well with my people on CONL. That's Coin, that's the ETF for Coin. Same configuration as TSLL or near it. But when this broke across this level, this top, that top, and these bottoms, that was a breakaway move. I put a swing on for my people around 40. And it went vertical in just a few days to 71. I pulled down and bounced. So if it does get through 71 3/4, my target's 90. But this one's extended to, and may need to either back and fill or even come down. So be careful with that one. SMCI, yikes. Folks, everyone and his uncle thinks it's oversold. You think it went down 90%. Almost. Excuse me. 122 to 17. Today was a big bounce for it. And a lot of my people in my room are trading it. Look what it did after hours. 21 to 28 nearly, about 33% just after hours alone. A ton of short covering out here. And this company was rumored to be delisted, but now they say they're not. So obviously looks a lot better. But man, I got to tell you, when I see a stock do this, break down as hard as it did, and snap back, I look for resistance levels. 2 days it couldn't get through here. 28 is resistance. If it gets through it, your next target is 31 and 37. Simple as that. But I'd be awfully careful. A lot of times when the stock's coming down like this, draw a mid-channel line. Cut it in half. Be surprised how many tops and bottoms come in along that line. Take a look where it is. So if they get a pop follow through tomorrow, I would sell it. It's very likely to back off. Let's face it, it's gone up $10 since yesterday. It's the kind of stock that can, be 50 in 3 days. But there you go. For Barry Mew, NTES. That's a nice technical breakout. I like it. I think I put a swing on this one. I have to double check. I believe I did. Maybe not. No. It was net different stock. This breakaway gap blows through the moving averages, blows through resistance. Barry, there's my next. Well, there's resistance at the gap. I don't know if it gets through it. So if you see 90 tomorrow morning, peel it back. It's way extended. It's gone from 76 to 90 in the 4 days. Now, can I go further? Of course. If it fills the gap, 94 and then 96. But also consider that a drop from 104 to 76, 28 points, and then 76 to 89, 13 points. So about a 50% fib retracement would be right there. It would be natural to pause and pull back here. Just give me my take. PALL, Paul. Too sloppy a chart for me. When I see 1, 2, 3, 4, 5 up and then slam dunk, I would say my target is I would sell at 96.7, maybe 98 in that range if it gets there. And look for a pullback. This is not the kind of technicals or pattern that I want to be involved with. FAS. Great chart. And that's one thing about the financials that keeps me from being more bearish. Look at this chart. Are you kidding me? 1, 2, 3, 4, 5 though. So it's a 5-way move off these lows. And it's gone from 93 to 168. 170 from 93. This has gone up 77 points, folks, since August. About 80% for an ETF. Unheard of. It is flagging now. So where does it go from here? Well, it's all-time highs, so you tell me. Blue skies, folks. I would stop it right there. Under 155.6, out. And quite frankly, I don't want it under 164. Okay, the target is 178.80. And if it blows off, maybe mid 180s. Tough call. Where do I go for a pre-market platform? Joe, there's something called the stockmarketwatch.com that's really good. They give you pre-market, post-market runners and traders, but I think NASDAQ has them. There's several sites that have them. Just Google pre-market stock list, stock gain. Biggest gain is pre-market, that type of thing. It's several sites that give you that. Well, I'm not seeing any more questions. There's CCJ. I do like that one, by the way. Blue E. Great chart. I would be long the stock. It's a leader in the industry on top of it. One of the things I really like is to be in a leader when a group is running. Look at this chart. My target is 66 and then 75. And I think you'll get there. I think this market is far from done. But I like smaller caps. Not as much. And UEC. That's a good one. The low price stock in that group, check this out. My target is 15. It's $8 and change. Okay, and then William wants to know about Lockheed, LMT. Long-term chart, really amazing, extended, bullish, but pulling back down hard. By the way, William, this is a massive engulfing negative reversal bar. The fact that I made a new all-time high at 619, reversed and closed at 562, come down 50 points, and then further follow another engulfing bar. I'd be out of the stock like in New York nanosecond. Now, maybe not now because it's come down so far. It's come from 619 to 526, nearly 100 points in a week. So look for a bounce, maybe up to 560, 570, and exit the stock, especially if the bounce comes on low volume or with red bars like I have here.